I generally get called in on by clients who are trying to solve either a really big problem or a really complicated problem. Over the 3 years, I've worked with staff from the CFO, I've worked with Senate staff attorneys, I've worked with many of you, many of your companies. And now it is post-lunch, right, afternoon, and all of you are looking at me and you know what you see, but I want to show you what I hope I'm not seeing as I look out to you mid-afternoon. I want to fill in some blanks, and this is kind of more of what I'm going for. All right? It's easy to sound like you're armchair quarterbacking. Please understand I'm not being critical of any insurer or regulator or legislative body. I'm simply reporting the facts, and I want to come at this the way I came at all my work over the past 3 years, and that is from the perspective of the consumer. Ultimately, my goal is to inspire people into action because there is no one else who can do what we must do. Okay, so let's first talk about the core mission of insurance. It's rather simplistic but vital. We enable economies. Now, what do I mean by that? Well, through the protections we provide, we prevent consumers from, say, hoarding cash, which enables consumer spending. We also provide the collateral or collateralize the purchase of big assets that they would not otherwise be able to afford. When that breaks down, you have economic instability. By fulfilling this mission, the insurance industry enables and transforms societies. Now, in order to do this, there's a few absolutes. Now, we've managed to make it really complicated, but in the end, the fundamental cornerstones that you have to have are the ability to apply actuarial sciences, to forecasting claim or loss frequency and loss severity. We know that by being able to apply the skills and science of actuary to frequency and severity, what we are able to do in return is provide consumers with an essential service. Available, affordable, adequate, and when I mean adequate, I mean coverage choices they can afford, and reliable. What do I mean by reliable? That the promise is made by a financially stable organization that's going to be able to fulfill the promise. So we have to be available and accessible to provide adequate, affordable, reliable protection over their major assets. Simple, right? Well, when we get it right, and when we do it, we transform societies. Whether it's in the 1400s in shipping or 20 years before the ratification of the Constitution, bankers in England illegally, at their own peril, smuggled gold to Ben Franklin for the start of the first homeowners insurance company. Why do that? Well, all of a sudden, you had an entire population that could keep whatever it earned. And if they didn't have a way of protecting what they bought, then the fear of losing it could inhibit economic growth. They created the first homeowners insurance company. The 13 colonies jump-started their economy. It all worked out for Franklin and for us, of course, down the road. Then in the let's talk about a different time. In the late 1800s, major American cities faced a horrible health condition. 6, 7, 800-pound, 1,000-pound animals were dying and rotting in the streets of major cities. I'm referring, of course, to horses. That's cholera, typhus, all kinds of problems. Rats. A new methodology of transportation was invented. It's worth noting that that 3 of the very first inventors of different vehicles crashed their cars within 15 minutes of displaying to the press their new invention. But along comes a bunch of mavericks who have no data, launches an insurance industry which also launches consumer credit, And by 1923, which is where this picture's from, the car's gone viral. And finally, let's talk about computerization. The picture you see here is a 1939 IBM computer being installed in the headquarters of a major insurance company. We have to get back to our roots, and we have to get back to being on the offensive. Now, the ability to fulfill that mission and provide those services is being complicated, and in my estimation, the largest three potential sources of disruption are climate risk and resiliency, sea change that we're seeing that allows us to move to prevention and prediction, and actually mitigating against the loss. And more to the point for this audience and this conference and Florida's consumers, but make no mistake, this is Texas, this is Louisiana, this is Missouri, this is California, Arizona. This is a spreading cost cancer in property and casualty insurance. And I'm referring to AI-driven the manufacturing of social inflation. Now, just very quickly, when we talk about climate, I don't know about you, but a problem I've had is I just kind of go, ugh, it's overwhelming. But we now have a pattern, and we have a pattern that the insurance industry can participate in. And the pattern is this: increased temperatures generate two outcomes. First, drought and or fuel for a fire. The second is increased demand vis-a-vis air conditioning, whatever, what have you. In many of the older lines that are not buried, particularly lines that connect suburbs to major urban centers, that increased demand causes an arc, which causes a forest fire. Now, there are plenty of ways to play in this space, and there are plenty of ways to assess that risk. Here are a couple of maps. The top map shows how demand, peak demand on the grid is changing and where it's happening. The lower maps are just for California, but show where populations are migrating to, where temperatures have changed the most, and so we can get fairly predictive. I sat there and watched that hurricane go into the first ever, I think they said, into the LA basin, and as an industry I couldn't help but think we dodged a bullet because that storm brought rain before it brought wind. Otherwise it could have been another Lahaina. EPA is essentially calling for a rebooting of flood assessments. I'll talk about some innovators in that space, but again, this is opportunity. We talked about moving from rating and recovery to prediction and prevention. Here are just two articles, one from the Insurance Information Institute, that talk about safer than ever. And oddly, this is not about auto, right? This is about property insurance. And using sensors and partnering with innovators for load assessment to be able to predict when something's going to break. I spent close to 10 years almost entirely dedicated to the insurance industry's interaction with self-driving cars. This is from E&Y and talks about how collision avoidance technologies, the ability to predict and prevent, are going to impact premiums by 2035. Now let's get into the main meat at hand, which is I've used information from Locke Reinsurance, and that is social inflation includes socioeconomic and legal costs. We refer to these as loss costs for claims. I'm not entirely sure I agree that the U.S. population has suddenly adopted a greater propensity for litigation, and that is going to be a very important point I'll drive home later. We do know that the plaintiffs' bar is extremely well funded, and we do know, and this is going to be a public policy issue, that many major investment funds, hedge funds, family investment offices are actually investing in the growth of plaintiff litigation. Now, this is where we're going to test credibility and believability. So hang in there with me. Buckminster Fuller, famous Nobel Prize physicist, had this quote about innovation. You never change things by fighting the existing reality. To change something, build a new model that makes the existing model obsolete. Ladies and gentlemen, I'm here to tell you that that is exactly what was accomplished in Florida's property insurance market. It has been converted into a litigation economy that made traditional, stable, consumer-focused insurance nearly obsolete. Let me explain. Innovation typically happens because our brains are hardwired to see change as incremental. We see threats from change as incremental. And then someday along comes somebody with a fresh set of eyes and asks one of the most important questions in innovation. What if? One of the most infamous examples of this is Blockbuster had grown, been through acquisitions. They would have been seeing the world as incremental all of a sudden despite their success. And on the day their stock price peaked, Netflix was chartered as a corporation. Well, this is what happened here. The industry keeps seeing litigation through the same old lens. The people instigating the litigation saw an opportunity. So this is a real-time case study. This is innovation without a moral compass. I am not a fan. But if you want to out-innovate the innovator, if you want to make their system obsolete and get back to a better model of ours, you have to respect and acknowledge what was accomplished. And I will tell you, I have never had a project where I found myself so frequently going to experts in the sciences of math and chemistry and whatever, and saying, I can't be right here. I got calls from Director Simon Blank encouraging my work, saying we knew it, we just couldn't prove it. And I've had mathematicians from the intelligence community and NASA review the work. What was accomplished covered a time span of 2016 to 2023. And the reason I picked 2016 is because there was a plaintiff attorney conference in Puerto Rico that was attended by John Morgan. He met a brilliant technology entrepreneur by the name of Reuben Moskowitz. Reuben made a pitch that you could build an artificial intelligence, data analytical driven growth engine for plaintiff law firms. John became the first seed investor. I can't say he's the only one. He still retains a place on their board. But John hired Reuben Moskowitz as the chief operating officer of Morgan & Morgan. Now let me be clear. I am not saying the demise of Florida property insurance lies at the feet of John Morgan or Morgan & Morgan Law. Wired magazine, it may have been Fast Company, wrote an article about this tech hub founded by a plaintiff attorney in New York named John Morgan that rivaled any artificial intelligence data analytics lab in Silicon Valley, including the infamous Google X Labs. They did raise $50 million in funding. The name of the company is Litify, and it allowed them to create strategies around behavior models. In the process, they achieved, and we keep hearing different numbers, 76 to 86% market share of non-class action plaintiff lawsuits against insurance companies. I defy anyone to name an organization outside of Facebook that in less than 5 years achieved, 4 years actually, achieved a 76% national market share. They generated an estimated revenue, and I've had this verified, from 2020, 2021, 2022, gross revenue that ranges from $3.8 billion to $4.1 billion. Now that revenue is your redistributed capital and premiums. They took it from insurance investors. They took it from boards. But claims are supposed to be random, right? So how can that happen? What they were able to do using very advanced analytics is create 3 profiles that intersect. First, they created an insurer financial profile. Yes, they followed your rate increases, they followed your surplus, and they followed your the investment transactions. Then they created an insurance consumer profile, which allows them, I kid you not, they're using many, by the way, of the same data sources you use to underwrite and select risk, they're using to build consumer profiles. Now for the insurance industry, this is vital to understand, and I am completely with Florida's chief insurance consumer advocate on this. The profiles that they were developing weren't about who's most likely, who has a propensity to want to go screw their insurance company. That isn't it. At its most simplest, they're developing their profiles around consumers who have a propensity to believe a professional. I had a colleague from Georgia moved to Florida. Her husband was a general contractor for 20 years. I said, would you mind doing me a favor? And he called up 5 roofers and he went and interviewed with them. In all 5 interviews, at some point after they got comfortable, the question was asked, are you comfortable damaging a roof to replace a roof? He said absolutely not, and he did not get 1 call back. Finally, they developed an insurer and insurer policy language profile, which includes being able to forecast your defense response. Think about all of the personal information, publicly available information, and then think of all the information that would be in a litigation case file from 500,000 cases just for Morgan across the country, and that was before Litify started to be adopted by Florida plaintiff attorneys. Where they overlap is the sweet spot. When you get those together, they can identify down to the house who is most likely to be insured with which company if there's a lawsuit, what will be the defense, and it allowed them to essentially harvest capital. Let's talk first about AMCAP. And as far as I'm concerned, everybody in this industry owes AMCAP a debt of gratitude. They were wonderful. When the insolvency came around, I called them up. They threw their doors open. They were totally transparent. They gave me access to their defense counsel. Well, try this out for size. Irma happens. AMCAP, as you know, is a specialty insurer of condominium developments. They take around 200 claims. They go inspect them right away. And roughly 189 are closed by the customer because the damage is less than the deductible. Follow me so far? Year passes. Another year passes. Now, for the actuaries in the room, how many of you are going to perceive a threat or make a note about 189 claims that were agreeably closed without incident by the customer because the damage was under the deductible? And those are, you can see the orange bars are those suits. Year goes by, as I said, year and a half, and you can see on the graph on the right this damage level being below the deductible. And income 169 over the period of 9 months, 169 supplemental claims for, get this, 65% to 85% of the total insured value of the development. Now, I don't know about you, but if it's me, and I'm going to go re-inspect a loss that's 85%, 70% total insured value, I better be pulling up to inspect bulldozers, pile of rubble. Over the 2-year period in between the claim being closed at zero and this enormous demand for $14, $20 million, every unit that sold had sold at asking price. Not one occupant was displaced. Not one occupant filed a lawsuit against their insurer for the damage of their unit. In fact, here are 2 of those 169 in aerial pictures taken vis-a-vis Google, time-stamped right in between the claim being closed and the supplemental request coming in. Now, I don't see any rubble. AMCAP, understandably, and don't judge, believe me, I've looked at it. Every single person in here would have done the same thing. The judges said, well, you've got an appraisal clause. Take this through the appraisal. Okay, fine. The appraisers are looking at this and saying, well, you guys closed it at zero. You guys want $14 million. You're so far apart, there's nothing rational about this. Boom, we're going to cut the baby in the middle. $6 million. In fact, it happened so fast and to such a detriment that in that 9-month period, with appraisals and umpires, alternative dispute resolution, it was $487 million in damages, and that doesn't include the fees. Nobody could have withstood it. It was a mugging. 2 plaintiff attorneys that are managing founding partners told 2 AMCAP executives, we've put you out of business, you just won't know it for 11 to 12 months. It took 10 to 11 months. They had done the math. That got me to thinking, could these guys really have gotten so coordinated and so sophisticated they could target insurers? What you see in the red is AMCAP's change in lawsuits from year to year. Now look at the scale. Yes, it's in hundreds of percent. The orange is their surplus. The green represents the changes from year to year in their combined ratio. And just take for a second and look at the formation of these lines. And I loved Corey's presentation today. 336 outstanding claims, 386 million in liabilities. One plaintiff in Collier County, this is a quote from an AMCAP executive, said, called us up because they had only 17 claims through that firm. They had already paid $49 million, and the outstanding demands were 3 times that amount. I looked at Gulfstream. Look at Gulfstream's lawsuits and how they changed. The lawsuits went up as the combined ratio went down and as the surplus grew. Look at Lighthouse. The red line is their filed litigation per year. The blue is their investment funding. The green is the rate filings. Now, here's what's fascinating about this chart. Look at the peak of litigation relative, go straight down to the green line on rate filings. They waited 8 months for the increased rates to be paid by the consumers before they peaked the litigation. Wait, claims are random, right? Look at Avatar. Look at how the surplus grew. That came from some capitalization and from positive experience, but look at how lawsuits track exactly. My favorite is the St. John's because I peeled out all the other information and just said, what if I hold up St. John's lawsuits per month against their capital transactions, their investment transactions? You cannot tell me that this is an accident. So I expanded it. I created a list of 12 companies. And those 12 companies I used as a control group. They were not all insolvent. And what I measured was the changes in market share. So for 40 plus carriers, the change in their share of the lawsuits between 2017 and 2021, 4 years, was minus 6%, cumulative. However, for the 12 companies I'd identified as potential targets, their growth in the market share of lawsuits grew 556%. Look at the surplus. So among the 40 plus carriers who did not experience growth in litigation, they had a positive 5.43 aggregate change in surplus in their share of the market surplus. Look at what happened with the targeted carriers. A collapse of 410% in surplus, in their share of surplus. Finally, look at the combined ratios. What came out of that, and this is really significant, look at the title of this graph. Changes in the market share of lawsuits appear highly determined by the changes in market share of surplus. Not correlated, determined. I looked at market share premium, because that would take into account rate increases. I took into account market share surplus from the same year. And then looked at the litigation market share the following year. And look at the alignment. I took litigation market share for 2021, overlaid it, boom, spot on. Obviously, what started out as something in the innovation space as an idea had flourished to the point where this plaintiff network could target any insurance company at will. But it brings up an interesting question. If a company goes under and it's got this inherent profile that leads to this very detrimental plaintiff strategy, do companies participating in the takeout business or in the clearinghouse run the risk of inheriting instability? I don't know the answer to that. I'm just raising the question. Well, what you see here is they can bring in MLS and Zillow data. So what you see, the top part of this map that were successful and we could identify in bad faith lawsuits or in more complicated lawsuits against an insurance company, all represented by the same attorney, all represented by the same contractor. Then, within 120 days, the property showed up on Zillow with a listing of having a new roof. I found $5,000 rebate offers, $5,000 commission offers, $1,000 commission offers. I also found plenty of information in the Better Business Bureau indicating that some realtors work with some roofers before they sign a listing contract. What about this notion of going door to door? Okay, the map on the left are lawsuits from Fort Myers from 2018, and then the next one's 2019, the next one is 2020. 2 contractors, 2 attorneys. Now, so I blew some of those up, and you see the map from Orlando. The lawsuits by date, they were all filed on March 27th, they were all filed by the same law group, and they all involved the same insurer. That's what they can do. So the core mission of insurance, again, is to enable economies by protecting customers and organizing cash flow. I made the case at the very beginning of this that this network had accomplished Buckminster Fuller's challenge by making the existing model obsolete. I am more than happy to debate this, and it brings me no joy that I came to this conclusion at the end of each year for 3 years. The industry has fundamentally lost the ability to quantify and forecast loss frequency and loss severity. When a $7 million judgment can emerge from a $0 closed claim 2 years after the fact, that because they are using the law and an alignment of the law, sound regulatory oversight had become virtually impossible. These are not claims that you're going to gain any traction in trying to enforce fraud on. And as a result, consumers in Florida do not have availability to adequate or affordable or reliable insurance. The industry was wrecked. We are getting it back. I am optimistic. The regulations that were passed, the reforms, were so vital. But you have to acknowledge the success and the speed with which this happened. And if I had gone to any insurance professional, maybe anywhere in the world, 5 years ago and said, a network of people are going to render actuarial sciences, insurance regulation, and the ability to provide protection inviable as business models. And they'll do it in 3 years. I'm pretty certain I would have 0 believers. Here's what we do know, and I'll close with this. Transparency from us and scrutiny on the insurance industry is only going to become more intense. What happens from here on out is our watch. And who is responsible for the financial well-being of our customers? Now, we've been at this wonderful conference center for 2 days now, and every single meal we have been served by the greatest of staff, one of whom is a middle-aged woman who's soft-spoken, sweet, has owned a home here for 25 years, 10 minutes from the hotel. She has had to move family members into her house to pay for the increased premium, to avoid forced mortgage insurance. She's literally had to go around the community, find family members, ask them to move into this now very crowded home, so that the home she's had for 20 years, she can keep. When I say we enable and protect economies, those are the people that we have to serve, that enable the service industry, that enable the tourism industry, that take care of us in our hospitals, that are at the nurse's desk in our doctor's offices, the elderly. Less lawsuits and a 10% improvement in combined ratio can't be how we define a win. We have to define a win by taking back our ability to control our industry away from these people who are now spreading these practices to Louisiana and their consumers, Texas and their consumers, Missouri and their consumers, and California. Be as sophisticated as they are and do not underestimate their sophistication. I know how important our mission is. Thank you very much, and I'm wide open to questions, debates. If you would like an assessment of your own litigation, a fresh set of eyes on some of your litigation history, or a board meeting, investor meeting, what have you, please feel free to reach out. Thank you.